Good afternoon, dear subscribers of my channel. If you're not a subscriber yet, I highly recommend subscribing so you don't miss the upcoming videos. Today I have some good news and some bad news for you. So, I recommend watching this video all the way to the end so you know how this change will affect you. The Canadian Central Bank has cut the interest rate by 0.5%. Many economists were guessing whether it would be 0.25 or 0.5%, and they ended up cutting it by 0.5%. This is really good news for people who have a variable rate or for those who are in the process of getting a mortgage and plan to go with a variable rate. I want to mention one very important factor right away. Every time the Bank of Canada changes the interest rate, we get a huge number of calls, and people ask what's happening with their rates. If we gave them a pre-approval, they expect that the pre-approval rate automatically dropped by 0.5%. That's not the case. I highly recommend you watch this video that's showing on the screen. I explain there why fixed rates don't have a direct relationship with variable rates. If you decide to go with a variable rate, then yes, your rate has automatically dropped by 0.5%, whether it's the pre-approval rate or if you already have a mortgage. If you have a fixed rate, or if you're in the process of getting a mortgage and want a fixed rate, then this change doesn't directly affect your rate. After the last cut made by the Bank of Canada of 0.5%, fixed rates actually went up instead of down. So, I really recommend you watch this video that you see on the screen right now to understand what the variable rate is based on and what the fixed rate is based on. The Canadian Central Bank has cut rates 0.5%. Today's so-called overnight rate is 3.25%. 3.25% is the rate that banks use when they trade with each other, so to speak. That's why it's called the overnight rate. But clients get their rates based on what the so-called prime rate will be. The prime rate is the difference between the overnight rate of 3.25 and the prime rate that banks set. Today it has dropped from 5.95 to 5.45. The difference between these two rates is basically the profit that banks make when they offer rates to clients. When we talk about mortgages, banks offer a discount on the prime rate. Let's say prime minus 1. If you're getting a prime minus 1 rate, then you expect that if the rate is currently 5.45, your rate will be 4.45. Why do they offer a discount? Because banks have less risk since they have your property. If you stop paying, they will just take it back. So when we talk about credit cards, the risk is huge. That's why there will be prime plus. Let's say prime plus 20, or if you have a car loan, or if you want to get a line of credit, it will always be prime plus because the bank has a much higher risk. It's not that easy to take back or sell a car. It's easy to take it back, but selling it isn't that great. So, when banks offer mortgages or loans, the way they add to the prime rate, whether they add a markup or give a discount, always depends on the risk. Who is this good news for? For everyone who currently has a variable rate, your rate will automatically drop 0.5% next month. This is also good news for people who have a line of credit, whether it's secured or unsecured, because they are also directly tied to the Bank of Canada prime rate. Now let's talk about why it's also bad news that the Canadian Central Bank lowered the rate, not just a little, not by 0.25 like some economists expected, but by 0.5%. The main reason the Canadian Central Bank lowered the rate by 0.5% is our economic situation. Our economy is in a dire state. You could say that across Canada, our economic growth is lower than we expected, except for two provinces. In Alberta and Quebec, the situation is still somewhat normal, but if we look at the whole of Canada, we see that the economic situation is in bad shape. If we look at the reality, our economy was actually in a very dire state already in 2023. The only reason we haven't been in a recession yet is that a huge number of people have come to Canada. We had a huge influx of immigrants. In 2022, over 1 million people came, and in 2023, over 1 million people. All these people had to somehow get by here. They needed to buy essentials for the time being, even just anything. Let's take the same spoon, fork, mug, couch, bed. And what does economic growth depend on? It depends on how much people are buying. And thanks to these immigrants, even though the economy was already in a not so great situation, people were already facing financial problems, mortgages were expensive, and people didn't know how to deal with inflation at all. But the reason our economy was still in decent shape is that immigrants, the people who came to Canada, there were a huge number of them, they were buying everything they needed to get by at first. Right now, if we talk about 2025, the situation will change drastically. In our economy, that opportunity won't be there in 2025. as our government is reducing the number of people who are allowed to come and live or stay in Canada. First of all, they have cut down a huge number of people who can study here. This means fewer people are coming to Canada and fewer people are buying all sorts of products and things. This will negatively impact us. In addition, they are reducing the number of people they will actually let in. If we look at what they've set as a target, in 2025 there will be a maximum of 395,000 people. There will be a maximum of 395,000 people. In 2026 it will be 380,000 people, and in 2027 365,000 people, compared to over a million, because in 1 year we had 1.2 million, then 1.3 million. You can imagine how much fewer people will be coming to Canada. And this will definitely have a negative impact on our economy, because all those people who could invest in our economy and buy various goods and products won't be able to do that, since they won't even be in our country. The next reason the Canadian Central Bank cut the rate by 0.5% is our unemployment situation. And this will definitely have a negative impact on our economy, because all those people who could have invested in our economy and bought various goods and products won't be able to do that, since they aren't even in our country. The next reason Canadian Central Bank cut the rate by 0.5% is our unemployment situation. Notice how much unemployment has changed. 2024, it's currently at 6.8%. That's a huge number of people who are unemployed. These are definitely people who won't be buying anything because their goal is just to get through this situation. That's if we're talking about Canada. If we're talking about Ontario, the unemployment rate there is even higher. Right now they have a 7.6% unemployment rate. And we expect that in 2025, it could rise even higher than 8%. This factor is definitely very negative and will automatically reflect on our economy again, because if a person has no money, they won't be buying anything. And this factor indicates that we are already in a recession. Our government tries not to mention that word, but the truth is, we are there. We already had this last year. As I said, thanks to immigrants, we were able to get around it. But in 2025, we won't be able to get around it, so the situation with the economy can't just change overnight. It's going to be a slow process. I think before it gets better, it's going to get worse first. As for the rates, we already know for sure that the Canadian central banks will be lowering the rates next year. If you look at this list, it's a list of meetings where the Bank of Canada will decide what will happen with the interest rates. The next decision will be on January 29th. It's hard to predict what it will be like, but we know for sure that the rate will continue to go down. How much lower it will go, the future will show. Keep following me on this channel and I'll keep you updated. Clients often ask us what we would recommend right now, a floating or a fixed rate. There's no straightforward answer to that question. It all depends on your nerves. But to be honest, I'm not a fan of floating rates. But as of today, I think, judging by the picture I see and what we expect in the near future, this could be a decent option. So, if you're good with your nerves and can sleep peacefully, then I think going for a floating rate might not be such a bad idea after all. It might actually be a positive thing, but it's a very important factor that you choose the right bank for this. I never get tired of talking about this topic, because if you take a floating rate at RBC, TD or anywhere else, yes, if you break that deal early, the penalties will be the same as at other banks. But someday you'll decide to switch to a fixed rate, and when you move from a floating to a fixed rate, you can only do that at the bank where you have the floating rate. You can switch to another bank, but there will be penalties. And you can only switch for free at the bank where you currently have a floating rate. This is where you'll get caught in a trap. Because if you switch to a fixed rate at banks like RBC City or Scotiabank, you can't get out of there. That's why we're always interested in keeping our clients flexible. So we'll set you up with a floating rate at a bank where, when we decide to switch to a fixed rate, we'll let you know when it's beneficial. Then you'll end up with a bank that has low penalties. And if there's a change, if it makes sense for us to switch to another option or lower your rate, we can always do that because it will be a bank with low penalties. Then you'll end up with a bank that has low penalties. And if there's a change, if it makes sense for us to switch to another option or lower your rate, we can always do that because it will be a bank with low penalties. In this regard, I really advise you to come to us instead of getting a mortgage anywhere else, so to speak. Given the change in interest rates, there should have been a direct reaction related to real estate. Property prices should have gone up by now. But because of the reasons I've already mentioned, our economic situation, the fact that people are currently worried about losing their jobs, this change will happen much slower than many expected. So, it's 100% that prices will go up, but how quickly that happens depends on what our economic situation will be. The fact that our friend and neighbor Trump is promising us a 25% additional tax on all products coming from Canada to America is definitely going to hit us negatively even harder. But I hope it doesn't come to that. I really hope that we have elections coming up soon and that our new leader, whoever comes to power, will find common ground with the Americans and that it doesn't come to that, because that would really be a big problem. I also know that many people are saying that if the Canadian bank lowers the interest rate, it will negatively affect our dollar. Our dollar is already at a record low and it's going to drop even further. Yes, that's true on one hand. Indeed, the drop in interest rates affects the dollar, and our dollar will start losing value further compared to the American one. But right now we need to save our economy. Our economy is in terrible shape, so I believe that the Bank of Canada is making the right decisions moving forward. The decisions should be to lower the interest rates to save our economy. In conclusion, we expect that interest rates will continue to go down, property prices will rise, but this is all regional. We don't have a Canadian real estate market, we have regional markets, so I recommend talking to your realtor. They know your market and can tell you exactly what's happening. But one thing is clear, prices are going to rise. Who know your market and they will tell you exactly what is happening and how. But one thing is clear, prices are going to rise. Therefore, if you have an interest, if you want to buy real estate and want to get favorable mortgage conditions, not only a good percentage but also favorable conditions, I advise you to contact us. We will help you with this. That's all for now. Wishing everyone good vibes, God's blessings, and good health. Until next time in the virtual world. This was Victor Schaefer.
Thank you for watching this video. We hope you found it helpful. We'd be happy if you share it with your friends and acquaintances.
Follow us on Facebook at VS Financial Group and on YouTube at VS Solutions.
If you're interested in getting a mortgage or need insurance, fill out the form on our website, visasolutions.ca.
Contact us at 1-800-77-282-0904 or write to us at saveavssolutions.ca. Enjoy life today and we'll create a successful tomorrow for you. Or write to us at saveavsolutions.ca. Enjoy life today.
And we'll create a successful tomorrow for you.